So basically, I had a town hall a listening session to solicit possible solutions and what the main issues are, other than just which is substantial, other than the rise in insurance rates. And what the main concern was foreclosures, because mortgage companies require homeowners insurance to be as part of the mortgage requirements. Otherwise, they will place an insurance premium on the property, on the mortgage payments, and then they can't afford it. What I'm hearing is basically buyers to Lava Zones 1 and 2 know that they went into Lava Zones 1 and 2, and they did price out the cost of homeowners insurance when they went in, as well as the mortgage companies did too. I mean, frankly, that's part of the mortgage companies, the bank's due diligence, is to ensure that the rates on home ownership, which would include property insurance rates, would be something that the buyer would be able to afford. However, neither the mortgage companies, neither the banks, nor the buyers were aware that all the insurance companies would leave the area soon. I mean, after the Maui fires, and leaving the area residents with just the HIPAA coverage, HIPPA, which is the coverage of last resort. So neither the mortgage companies nor the residents were aware that their insurance rates, which were like $1,000 a year for a modest home, and the properties over in Puna, I mean, were the most affordable area in the state, because the homes are still so affordable, like a $300,000 home. All of a sudden, the property insurance of $1,000 a year, even though they're in Lava Zones 1 and 2, have risen to like $6,000 a year, something they really can't afford, and something that the banks and mortgage companies, especially the buyers, did not take into account this 600% rise in property insurance that exceed their actual mortgage payments and property taxes. So one of the bills I intend to introduce, and I will be introducing this session, would be to prevent mortgage companies from requiring property insurance to cover more than their debt. So hopefully, by reducing the amount of coverage, we could reduce the amount of rates. And I'm hoping by bringing down the amount of rates, we will hopefully be able to attract more insurance companies into the area, which has occurred really, frankly, since the 1992 lava flow, which was the whole reason we had the HIPAA law to begin with. At the time, Kalapana was inundated with lava. All the insurance companies left the area, and the HIPPA law was created to provide some property insurance of last resort for those areas of Lava Zones 1 and 2. So that's one of my main bills. And in the meantime, I am working with the Insurance Council and HIPAA to hopefully allow for payment plan for their property insurance, because right now they either require full payment in advance or every 6 months, which is what the norm of all insurance companies doing business in Hawaii is either every 6 month payments or the entirety. So I believe they're working on that to make it more affordable. And one of the other things we're also looking at is to see whether or not we can have a risk assessment that is more realistic for the area than what the insurance companies are using. Right now, they're using the lava zone designation by the USGS, United States Geological Survey, to determine risk, rather than rather than a study of the area. And the big example of that is basically, the flood coverage, the national flood coverage in the country. The insurance companies have the 100-year assessments of risks. They know like the 100-year flood where it goes, the 50-year flood where it goes, and they determine risk that way. Whereas for lava zones, there is no such modeling, is what I have found out. And that's why they rely on the USGS geological surveys instead of determining whether or not the risk is actually there for those designated areas. The geologists say basically the lava zones are based not on risk of like the likelihood of a 100-year flow or a 50-year flow or inundation of lava inundation in those areas, but basically what geologists should look at as far as in the event that when there is an eruption, where the likelihood of flow is, rather than whether or not an eruption is actually more imminent rather than not. So those are the two things I'm looking at, as well as the third thing of working with the insurance companies to see the payment assessment. And the last thing is what the realtors really want is HIPAA coverage of commercial areas. We know in the past census that the population in Puna, and Puna is not just lava zones 1 and 2, it also includes 3, but the most affordable areas are in lava zones 1 and 2. And if we are pushing for affordable housing, the population is seeing that the affordability of housing in Puna is far more than in Maui, than in Oahu, than in Kauai. It's in Puna. That's why it's the fastest growing district in the state. So if we are allowing residents to live in lava zones 1 and 2, which we obviously are because it's part of the land use designation to allow for residential ag in those areas, and it's part of the county plan to allow for residential zoning in that area, then we should also allow for commercial area zones in that area, because the residents need the services of groceries, of gas stations, of offices like medical services in that area. And if we want those kinds of services to be there, then we should allow for property insurance to allow them to have property insurance. So those are, I believe, the 3 or 4 major things that I'm working on the next session to make it more affordable for the residents in lava zones 1 and 2.
Okay, why is HIPAA coverage so expensive?
Because it was meant to be the last resort. Basically, when I talk, the insurance companies determine the risks, and I suspect it's because if they are being required to cover an area they do not want to cover, they want to make it worth their while. And they have proposed these rates to the insurance commissioner, I believe. So the insurance commissioner has approved these rate increases. But again, the residents had assumed, at the time when they bought those properties, that these other insurance companies, which were covering it for a 1/6 or a 1/10 of what HIPAA requires, will continue to be there, because at one time there were like 5 or 6 different insurance companies covering lava zones 1 and 2. And that was even after the 2018 and the 2014 flows.
Oh, interesting.
Yes.
Yeah, because my home insurance is like $700 a year. I'm like,
yes.
Oh my God, how do these guys do it?
Well, frankly, what the insurance council told me, and I think you're going to start seeing after the Maui fires and after the disasters, the fires on the mainland and the disaster flooding on the mainland, that climate change, everyone's property insurance rates are going to go up because the reinsurance, which is what the insurance companies rely on and are required by the insurance commissioner to have. You know, insurance companies have to have their own insurance to ensure that they're able to cover the risk that they write on, and that is called reinsurance. And that's usually Lloyd's of London and other reinsurance companies. But the reinsurance premiums have skyrocketed worldwide, and that reinsurance premiums is also being passed on to everyone. So people in lava zones 1 and 2 not only is going to have to contend with the regular property insurance rates that everyone is going to see a rise on because of climate change, because of Maui fires, that and Hawaii normally having the lowest property insurance rates in the country because we hardly had any major disasters, are starting to really feel the effects of climate change, because the 2018 we had like 4 major disasters, right? We had the Kauai floods, we had the lava zone, we had Hurricane Lane, we had the Pali landslide. Those were all declared federal disaster zones. We're starting to see far more disasters in Hawaii. So everyone's property insurance rates in the state of Hawaii is going up, and especially those in lava zones 1 and 2.
Okay, my last question or topic would be then if you could draw the line further with your concerns and tell me, like, if we don't solve this problem as a community for the Lava Zones District 1 and 2 folks and they're getting priced out of their homes, then what? Does this add to homelessness problems or what?
Well, then there's going to be far more foreclosures, right? Because the insurance, they're not going to be able to afford the insurance, and the mortgage companies are going to force place this insurance. So yes, it will rise, especially since, like I said, my district is the last affordable place in the state of Hawaii. And we see a lot of people from Oahu moving here, and we see a lot of people actually commuting, buying homes in my district and commuting to Oahu to work and coming back. I'm hoping that that's not going to happen, but otherwise we're going to see more high rises elsewhere, because we either build outward in areas like mine where it is affordable, where the land is still affordable, or we build up, and that's what people are going to end up having to say. I mean, because we need to solve this affordable housing crisis we are in the state.